This is going to be a mixed review. I've been doing a lot of research on, I haven't been as active with posting videos lately, but I'm doing a lot of research on the 3-bar micro channel and running a lot of tests. And so I was going to go over a couple of them with you guys today. And one of the more important ones that I figured out, I ran a test, was when the second and third bar get 1R of the first bar in the micro channel or more, right? Just has to touch it. So as long as the second and third bar get 1R, for an example where it does not happen was 59, 60, and 61 today. But when the second and third bar get 1R of the first bar, the win rate for the symmetrical second leg was over 80%. I believe it was 82%, 81% to be exact. And if you filtered out the trades before bar 7 and the trades after bar 65, the win rate went up to 85%. Also, I wanted to check how often trades were breaking out, right? So first I had to define, what I wanted to test with a breakout. And what I decided I wanted to test with the breakout was breaking out above swing points. So when you get a breakout like 12 through 14, that breaks out above a swing point, something like the 10 high. How often does that sort of trade win? And similarly, trades like this that do not break out, how often do those win? Something else I should mention, I mentioned there was an 84% win rate if you filtered out signals before bar 7 and after bar 65, 4 if it gets 1R. And the ones that do not get 1R of the signal bar were only a 65% win rate. So if it does not get 1R of the signal bar, you should be a little bit more careful. I also tested, what about the first bar? Because this is a bad signal bar on 3. So I tested in the bear case, if the bar closed above its midpoint, how often do we test back to this low before getting a symmetrical second leg? I found that 77% of the time, if you get 1R of the signal, you'll test back to the signal bar's low before getting a symmetrical second leg. Here's a bad signal bar. Here's a good example. We tested back within, I believe, 1 or 2 ticks. I wouldn't actually count this as a test either. It had to be within 1 tick, but it was very close. And so we obviously tested the 3 low. And so when you get 1R off of a bad signal bar, a lot of times that happens in trading ranges, and we will pull back to test that signal bar. So just remember, if you get a 3-bar micro channel and the first bar of the 3-bar micro channel, let's say in a bear 3-bar micro channel, the first bar is closing above its midpoint, 77% chance we're going to go test that. With the good signal bars, I believe it was 60%, 42%, sorry. 42% of the time. So when you get the good signal bars, a lot of times it will not test back to that high, you can see here, before forming that symmetrical second leg, which is important. Also, as far as breakouts, when the trade was breaking out, the win rate, again, got a little bit over 80%. And when the trade was not breaking out, the win rate was also 65%. And it's the same thing with later legs as well. So I think the important thing, the things I found recently that I found really important are trades that where it gets 1R and trades where it breaks out. Those trades win 86% of the time. I did not take this one today just because of how strong this was. I didn't really want to buy. But I've noticed that I've been getting a little bit impatient waiting for the full 3-bar micro channel to form. And one of my buddies, Ali's white paper, he basically just trades the white paper. He is a profitable trader. And he told me that I'm basically just going to start trading the white paper at a certain point, and so I might as well start doing it now. And so I'm just going to be being a little bit more flexible with what I need to trade for breakouts. So like 35 and 36 is a breakout for me, and you can manage it the same way as the 3-bar micro channel. All breakouts behave the same way, regardless of what you're breaking out of. You still want to see the same things. And so, the management for a symmetrical second leg from 35 and 36, it's going to be the same as the management from a symmetrical second leg from like 12 to 14, as in like the probabilities are going to be the same in early legs, or in like, obviously this is different than this, but if you have the same context, a 2-bar breakout will behave very similarly to a 3-bar breakout. It's just that it just depends on the context, right? And so if you have the same, removing context, the numbers will come back the same if you study 150 examples of a 2-bar breakout and a 3-bar breakout, or a reversal and follow through, and a breakout and follow through per the white paper, just depending which way you like to trade. I also have all these other stats. I'll show them. You guys can pause the video. But I have basically 77 stats, but I don't remember most of these. A lot of them are just through tests that I've run, and obviously like my surprise definitions and things of that nature. But this is just a sheet on basic studies. But I have to, I have a lot of work left to do. This is a smaller. I still have a lot of testing left to run, and all this earlier testing. I didn't really think it was all that great, but anyways, for today, 3, 4, and 5 was a breakout below the bear channel from yesterday. I did not sell 5. I sold above 7, taking a chance that we were going to get some sort of bear channel or at least get below the 5 low. I was surprised we did not get below the 5 low today. I think that we will get below the 5 low tomorrow or Thursday. It's unusual for the market to just forget about bears from something this strong. And this is it's a channel, it's a bull channel, but it's a pullback. And after channels, the market generally goes into trading ranges. So this was a bull channel, and then we're probably going to evolve into a trading range. Once we break below a lower low, you should expect, when we get a lower high and a lower low, you should expect us to evolve into a trading range and potentially get back to this 5 low. So I think that's going to be a really important magnet over the next couple of days. So if we start to sell off tomorrow, I'm going to be looking for this area pretty aggressively. But I did sell above 7 and I got out above 13. It's a breakout and follow through. Sorry, a reversal and follow through, 12 and 13. And 13 gets 1 R of 12. So this is a very, very high probability trade to be buying here, expecting another leg up. I did not take the buy. I just got out because it was a late leg. I was concerned, but I thought it was a good setup. Yes, there's reversals in here, reversal follow through, and you do get a second leg, right? 26 and 27. It still gets the symmetrical second leg, but it's not really that great. 31, 32 still gets a second leg, and then 35 and 36 I thought was really good. This was a breakout below a trading range, the tight trading range. This is the low of the tight trading range to me, the 17 low, and we did not quite break out of it, but I thought it was big enough that I could look to sell a pullback. I sold the 33 low during 37, and I looked for the symmetrical second leg. My 3-bar micro channels might be changing a little bit, but symmetrical second legs are a really important concept for me, for the way I'm trading. And my profit target was down here. 39 was disappointing, and I got out after 40. So I got out above 40, 39 and 40 for a very, very small loss. And I think that, I'm going to have to run a test defining disappointment. That's a really important one, figuring out, what's disappointing to me and go find the probability. Because when I see something disappointing, what the word disappointment means, it means the probability has changed to me. If 39 closes on its low, my probability is very high. So it's not disappointing. But when 39 does not close near its low, I didn't like that bar. And so for me, if I don't like a bar, I need to go run a test on that bar. And the things that bar, what is that bar doing? But it's hard to define, right? But once I can properly define disappointment, I'll be much faster to get out and do better. So it's hard to define disappointment. Like I know it when I see it, but I need to be able to put all of it into words and then create a definition and then run tests, figure out how I want to run a test and then run tests. So that's pretty much all of my studying right now. I thought you could buy 40 or 41. Usually when one trade fails, there's a trade in the opposite direction. That's high probability. This, 5-bar micro channel, okay to buy below. I did not buy here, but you could, again, it's still a 5-bar micro channel. You can still look for the symmetrical second leg. You do get it. Same thing here, 5-bar micro channel, symmetrical second leg. You get it. This is there's 6-bar micro channel. This was tough because I don't generally trade against tight channels. So, with this, I did not want to take the short. I thought we were in a bull channel and we had 2 big legs up and we were starting leg 3 on 61. I did buy the close of 61. I thought high probability that we get at least one tick above the 48 high. There was another study that I ran. I did not mention, but I'll mention it now. So I basically wanted to see when I get 4 consecutive bull bars, how often does the first reversal fail? Just a simple study. And so I basically said when I get at least 4 consecutive bars, I went all the way up to 6, right? So all the way up to 6 consecutive bars. So this would be another signal, right? I went up to as many as it was in order to test the first reversal, but it had to be at least 4. So this would be a signal. This was a signal. How often does this first reversal fail? So the way I tested it was how often does it get 1 R down before we get above the bar? And I found that it's 55%. But the thing is, if you remove trading in late legs and you remove trading against the regime, basically against a tight channel. So this is a situation, I did not take this one because this tight channel, it goes up to 75%. So if you don't trade, if you fade the first reversal after 4cc in early legs and not against really tight channels, you're going to do pretty well. You should win about 75% of the time. But basically, the whole context matters for the symmetrical second leg a lot. And what I found in my studying is that every single test that I run about, when does XYZ fail? When does XYZ work? Pretty much every single time I find that breakouts don't do that well against tight channels, and they don't do that well in late legs. They're okay at tops and bottoms of trading ranges because you'll sit through a deep pullback, but you'll still get the symmetrical second leg a lot of the time. So I get less worried a little bit about tight trading ranges because if you're trading on stop orders where you're selling below and you're exiting above, you'll get crushed in tight trading ranges. But you'll just break even if you shouldn't be trading them in tight trading ranges, breakouts and follow throughs, reversals and follow throughs, because it's not really worth it. But if you do, usually you're just going to end up being basically break even. But it's just not worth the stress. So basically, I'm just looking for breakouts now, looking to trade breakouts. It's not going to be I'm not just going to go crazy tomorrow. And all the rules stay the same is the thing. Everything I do with my 3-bar micro channel, 150% stop loss, looking for the symmetrical second leg, everything stays exactly the same. So when I took 36, I didn't sell the close, I sold the low. I had an 150% stop loss, and I was looking for a symmetrical second leg. And that's the key, is finding a way to trade breakouts. And then you'll learn you can trade breakouts on pretty much any bar throughout the course of time. So that's just kind of where I'm at right now. And I wanted to give that an update. But I'm sorry if you're looking through the statistics, a lot of them are not going to make sense simply because I created them and it was the research that I did on them. And so it's hard to just read a bullet point and understand the study. But of the 75, any given person should be able to understand 20 or 30 of them and should be at least a little bit helpful. But all right, as far as the daily chart, there were buyers below this bar, but I think maybe one more leg up. We might have to get above this high because this was a bad signal bar. And then you can see we had a reversal and follow through here. We're getting a second leg. The weekly chart, I really don't need to go over the weekly chart right now. All right.